Good morning, Sean Udall, the tech stock strategist here, come to talk about tech stocks, and we're not gonna spend the whole time on Apple here. But Sean, come on, what's going on here? They deliver the quad of good news here, and this thing's about to go in the red.
Yeah, well, I wouldn't be surprised. I mean, the stock has made a good run. I mean, it's basically gone from 122 to 135. So, a fair amount of good news is priced in. I see the stock, though, pretty easily getting to the 140 to 150 level in, I'd say, weeks.
Okay, and I know you shared a good note with me, and I'm gonna write it up later on. But could you just real quick, give us the reasons, your thesis for why that stock is perhaps undervalued at current levels?
Well, I mean, it still sells at a pretty notable discount to the S&P 500. So, I mean, the single weirdest thing about Apple is that there's always people want to create all these all these, I guess, issues with it and things like that. But the biggest mystery is why arguably the best I mean, it's pretty tough. You could say Berkshire Hathaway is maybe the best company on the planet, and you could say maybe a couple other companies are, but it's pretty hard not to include Apple in that talk. And it's also pretty easy to say, okay, they are the premier company in the world. So if that's the case, why the heck do they sell at such a substantial discount to the S&P 500? I mean, it really is laughable. So, but as far as the other things go, I sent you a note. I'll publish it later on my deal. I think my biggest thing is that what's the best way I can say this? The two large screen iPhones just are going to take a whole lot more market share than I think people think, and they're going to take it from Android, and this is going to go on a long time. So the old upgrade cycle for iPhones was typically 2 quarters. This could be a 2-year upgrade cycle, and I literally wrote that the day we saw the 2 iPhones. So, and that was probably a pretty bold call at the time. I think now that call is coming through. So anyway, there's a few other things. I mean, they've done $50 billion in cash in 2 quarters from operations. No company in the world's ever done that. I think the watch is going to be a huge hit, but it's going to be a huge hit over 1 to 2 years, not 1 to 2 quarters. So that's a long-term catalyst, not a short-term catalyst. And by the way, I'll just close on it. The thing I didn't even put in my note that is probably one of the most bullish things for Apple is Apple Pay.
Oh,
The payments deal.
yep.
So, and I didn't even include that. If there was one thing that I think could cause the valuation of Apple to rise over time, I would say it's Apple Pay.
Okay, all right. Moving on. GoPro after the close today. I know you've been talking about that one for a while. You said it was at least. This was when it was under 40. You said it was at least a $45 stock, and now we're trading at $46.30. What are you looking for out of GoPro? I just, Nick Shaheen, who was on earlier, kind of calls him a little bit of a one-trick pony here. What's your take on it?
Yeah, well, I mean, a lot of really good companies start out as one-trick ponies. I mean, Cisco System was effectively a one-trick pony, and Google was a one-trick pony, and I guess you could even say Apple was a one-trick pony at one time. So I'm not going to say that GoPro is going to become any of the companies I just named, but every single one of the companies I just named were one-trick ponies. So if that's the argument you can make against GoPro, it's frankly not a very good one. So the biggest thing, though, I would say on GoPro is that, so here's the thing I like the most. I would say expectations are pretty darn low. They crushed the quarter last quarter. The stock went down. But the stock didn't go down because of the financial results. The stock went down because they kind of had that surprise executive leave. So, I like the setup, and I like the setup because I think expectations are pretty low. Curiously, analysts have not. There's actually been some evidence where if analysts wanted to raise numbers coming into the quarter, they probably could have. But interestingly, they haven't done that. So this is actually one of my favorite setups. Now, you remember I really like the stock at $40 and lower, right? It's $38.50 to $40. I mean, that was like home run central. So I mean, it has gone up a fair amount. It's not like it's gone up 20 or 30%, but it's gone up 12, 15. So it's not as juicy as it was at $40, but I still like it. I still think it has more room. And again, I like the setup because I think they have a pretty good chance of having a pretty big beat relative to expectations. So that's kind of my preferred setup on stocks if you can get it. I mean, it's far better to have that than if expectations are just way too high, and the company comes in and produces a really good quarter, but the expectations are just so high. People are like, okay, well, they kind of did what we thought they were going to do, so what's left, right?
We talk about that a lot, as far as the bar being set high or low. Sometimes,
that's right.
Yep. Sometimes they come out, the company's lower expectations, and then they come out and they beat the lowered expectations, and they rally a stock, and you just kind of left scratching your head. So, good take on
that's
that.
Right.
Twitter. I know that's another stock that you like to follow. What are your expectations for Twitter?
Yeah, no, Twitter. You never know, if I were to say it now, Apple just crushed it. I mean, they really did just crush it. I think maybe people don't think they crushed as much as they did because they even crushed them more last quarter. But I would have said until I saw that Apple number, I would have said the company that could produce sort of the biggest upside surprise relative to even somewhat high expectations might be Twitter. I would say I expect them to beat the revenue number by at least 20 to 25 million. It might not sound like much, but again, 400 million, 20 million, or 450, 500 million, 420 million is a pretty good beat. But here's the kicker for Twitter. I don't think the reaction to the stock afterwards is going to have anything to do with the quarter. I mean, a big beat might help, and they're going to guide low because Twitter has created this new deal where they're going to come out, they're going to have a good quarter, but they're going to guide really tepidly. They've done that 2 quarters in a row. That's just what they're going to do now. It's kind of like the Apple of old, the Apple of the Steve Jobs era, where you could almost call the guidance that they used to give kind of laughable, but that's what they did. And actually it proved to be a smart thing, and a lot of companies since then have started doing that. So, but I do think Twitter will guide low, but it's all about, to me, all the really good things for Twitter are in front of it. So this quarter, I think, is going to be a good quarter. They could crush it, but I don't think the stock's really going to trade on that. I think the stock is actually going to trade on what I call a rising valuation piece. And the reason is you've got the Google deal that is literally going to start. It's still in front of them. So all the Twitter info is now going to be filtered in Google. It's going to be included in Google searches. And there was a day, we might have been on the day that was announced. I can't remember. But there was a day that this deal was announced, and the stock was up almost 10% in pre-market. By the time the market opened, they were only up like 40 or 50 cents. And I've always said from that point that was the single biggest and best piece of news Twitter's had, and the stock didn't really do much on it. So that I think is going to really drive the stock over time. Plus, Periscope's going to go viral. Plus, I think people now are starting to figure out how powerful Twitter might become. It's pretty much become the dissemination point for news globally. So, and I don't really see that changing much. So, as you know, I've been bullish on Twitter. I've had a lot of thesis points on Twitter. But I think the single biggest thing that's going to make the stock rise is probably the Google deal plus Periscope. Plus, might have this a rising MAU, monthly active users, has kind of been the Achilles heel. So I think the combination of 2 or 3 things might actually make monthly active users accelerate a lot more than people think. So there you go. I'm not so sure. I mean, that the stock is going to gap up and go and whatever, but it could. I mean, this could be a thing where I'm basically looking for Twitter to retake old highs. And if things happen the way I think they're going to happen, that retake of the old highs, which is 74, 75, might happen pretty darn quick.
Yeah, if not this quarter, maybe next quarter coming up. So I'd see your
I would say the next 2 quarters, but I would not be surprised if Google retook old highs in the next quarter. But definitely within the next 1 to 2.
You mean Twitter?
That's right, Twitter. Did I say Google? I apologize.
That's okay. And now let's see here. What else can we talk about? FireEye.
Sure. We got FireEye tomorrow. Now FireEye, I probably would have been going into this quarter. Probably would have been my most favorite setups. The only issue is I'm a little worried about expectations. And the stock has bounced nicely. It was just at just at 37.38 not that long ago. So at 37.38, the setup was almost spectacular. Here at 44, I mean, that is almost it's not quite 20%. What is that? 17-18% move off of recent lows the last month and a half. So that's, first of all, that's come in. A ton of other security stocks have reported well. Even Vasco Data Security, which I'm looking at right now, had a good number and is up $3. Palo Alto Networks has continued to go to defy the laws of gravity. So again, the good news for it is it's very, very cheap on a relative growth basis compared to all of the peers, CyberArk and the Palo Alto Networks and everybody else. But it's a company that everybody loves to hate. I do think expectations are just really high, and they're really high because everybody else in the space has been crushing. So if there's just one stock, I don't know, I just have a weird feeling. If there's one stock that the market powers that be like to pick on, and they just might pick on, it might be FireEye. So, the fact the stocks come up, 15 to 20%, everybody else is crushed. Because the thing is, I think they're going to have a very good quarter, but they're not really set up, the way they run the company, it's not like they're set up to crush the quarter. Because they're starting to add a lot more into deferred revenues. They're starting to lengthen the contract cycles. So instead of booking a lot of revenues in one quarter and booking up front, on a software sale, now they're booking the quarter or the revenues over the length of the contract term. So a lot of people don't understand that, but in simplistic terms, you might take a $200 million contract or $100 million contract, book it over 8 quarters. It doesn't look nearly as spectacular, but it's still real business and it's great business long term. So I don't know. I'm kind of mixed on that one. I'm probably not going to change my position a whole lot. I might hedge it a little bit. I have trimmed it recently. At the 44 level, I probably took about a third of my position off because it's been a pretty nice gain from lows. But we'll see. I mean, if they do crush it, like other companies, this stock has far, far more upside. But this is kind of one where I'm not looking for a great big move out the quarter. I'm kind of looking for a big move to continue that takes 2 or 3 or 4 or 5 quarters.
Okay, all right, and wow, we're running here. Just real quick, final assessment of the market. Hit new all-time highs yesterday, backing off. Just give us your assessment of the overall market.
Yeah, well, if you remember, you and I talked, 4 to 6 weeks ago, and we kind of had another kind of mini correction at the time. So I've been sort of bearish in the broad market. I got bullish again. Basically, at this point, kind of the higher we go, the more I'm going to sell. Look at Apple. I mean, again, Apple should be at $4 or $5. They probably will be up. They'll probably get to 138 to 140 in the next 2 to 3 weeks. But they're kind of beating them up today. I don't know. I kind of get a sense that the best way I could say it is I kind of feel like we could head into a little bit of a corrective phase again. Especially right at this NASDAQ 5132.55. I mean, that's the all-time high on the NASDAQ. I think what's going to happen is we're going to hit that number, and it's going to be like how we try to take out the old highs in the S&P. The first time or two that we hit that 5132 level, it almost doesn't matter what the news is. The machines are going to knock us down, right? And people are going to try to foment all these kind of fear-based things about it. By the way, we're going to go way above 5132. I mean, I don't know let's define way as, I don't know if it's 20% or 30% or 40%, but we're going to go way above 5132. But I think the first 2 or 3 times we hit it, we're going to get knocked down. We're going to sell it. Maybe they knock down the DAX. Maybe they beat up the China market. I don't know. Anything can happen. But at this point, I'm more of a seller than a buyer of stuff until we kind of do what we did after mid-February, where we had a 4 to 6 week consolidation. We kind of sold off a little bit. Some stuff I liked got cheaper, and then things started working to the upside again. So I'm not super bullish on the broad market here.
Okay, Sean Udall, the Tech Stock Strategist, joining us here for an in-depth outlook at the market.